When is the housing market going to crash? When are we going to see the end of the housing market boom in 2021 that we've been seeing? So the housing market crash, the devaluation in house values, we will see that come about once interest rates rise and demand drops. So it's simple economics. It's all about supply and demand, and it's all about interest rates. So as interest rates rise, payments rise accordingly, which reduces the purchasing power of many borrowers. And also, as far as inflation goes, as inflation rises, interest rates are going to rise accordingly to help stabilize inflation and or table inflation. So once you see the inflationary metrics start to rise, which we're already seeing inflation become a problem. But once you start to see the pandemic end, number one, we got to get the pandemic behind us. We have to get to herd immunity, everybody vaccinated that wants to be vaccinated, and we get control of the COVID-19 pandemic, then that's going to open business up. It's going to open office up. It's going to open up travel. And people are not going to be afraid to move once that happens. So a lot of people just aren't moving right now. They're not required to move. But once we get back to normal and people can move and travel and go where they want to go and are required potentially to relocate for a job, things will go back to that. There will be a trend of remote working and working from home and things like that. But there are a lot of companies and a lot of jobs that you still have to be at the office in person that cannot operate fully remotely. So people will still tend to move around, and as inventory increases, once interest rates rise, inventory will increase. People will be more likely to move and sell their houses. So when exactly is that going to happen? We don't know. But the indicators are interest rates, number one. Watch interest rates. If they get around 4% and over, that is going to slow the housing market. You will start to see listings start to add up. Days on market will go up, and you will see inventory levels go up. And then once we get closer to 4.5%, 5%, if interest rates ever get back to that level, then you're going to see significant issues and significant drops in values of houses. And all of that is going to be tied to getting the coronavirus behind us, getting everybody back to work, everybody back to the ability to travel and move, people that have been waiting to move and relocate for the pandemic because they don't have to. That's going to increase the opportunity for people to move, the desire for people to move. So those are the things, those are the catalysts that are going to lead to a devaluation potentially in house prices and potentially a housing market crash. One thing for certain, if interest rates get close to 5%, just like I predicted back in 08-09, the housing market will tank. And we saw values get cut as far as 50% in a lot of markets. People are overpaying right now. They're bidding up the price of houses because interest rates are low. I'm not sure if people think that the prices are going to continue to go up and up, but the housing market, the prices will come down. They always do. When we've seen extreme spikes like this, they've always tailored back. And the difference is between the housing market and the stock market is it takes a lot longer for housing to come back than it does the stock market. So stocks can rebound a lot quicker than the housing market, especially in this day and age with the quantitative easing and the backing by the Fed. As far as housing goes, it took from really 08-09 was the crash. The peak of the market was 04-05 in most areas. The crash was 08-09. It wasn't really until probably somewhere around 2018, 2019, where we got back to levels where we were before the crash. So we got back to 04-05 levels in a lot of markets in 2018, 2019. So it took quite a long time, about 10 to 11 years to get back to full market value of where it was before it tanked. And if you go back and look at the history of the real estate market, you'll see these ebbs and flows, these ups and downs, increase and decreases in prices. And there's a 10 to 12 year time frame that takes place from the valley to the peak to the valley, or you can say from the peak to the valley to the peak, either way you want to look at it. So those are the cycles I looked at. I read some articles back in 04-05 about all this, and 08-09 when that was happening, and I was interviewed on Fox News about it with Neil Cavuto. We were talking about the stock market crash on the biggest day sell-off that they had in the history of the stock market at the time, and housing values were dropping, and mortgage crisis was happening. So very interesting times back then, very different now. But again, it's all about affordability. It's all about low interest rates. It's all about lack of supply. So once we open back up, once we get the pandemic behind us, the world opens back up, the country opens back up, houses start hitting the market again for a variety of reasons, and interest rates go up, that's going to affect the values. And it's really the most important thing behind all of it is interest rates. Keep your eyes on interest rates. Watch what the Fed does, not what they say. You can go to the Fed's website. You can look at all the assets they're buying, they're holding, what their policy is, how they feel about interest rates. Watch what they're doing. Watch interest rates, watch bond yields, and watch mortgage rates. And that will tell you when the housing market is going to come to an end. The other thing is days on market. Watch days on market in your area. And also watch the multiple offers and the bids. You know, when people start pushing back on multiple offers and bidding houses up, then you know that the times are changing and the bust is right around the corner.